Welcome back, everyone, to another episode of the Meet Kevin Show. We are so fortunate again to have Ross Gerber from GK, ticker symbol GK, and Gerber Kawasaki, actively managed ETF, and financial advisors in the house. We're going to be talking about Tesla. Maybe there might even be some Tesla celebrating. And of course, we got to talk about this talk from Bloomberg today about a coming recession. And what about the 50 BP hike? Well, without further ado, let's bring him in. Ross, what do you think, man? Are we going to the underworld? We going in a recession?
There's a lot of talk. One of the things I've realized in life is that when you're in the investment world, there has to be something bad to talk about. Like there has to be something that's going wrong at any imminent moment. 28 years, almost 29 years in the business, things have been going wrong the entire time. And when I started in the market, the Dow was at 4,000. Okay. So when I started with the first of the everything's going wrong and the world's going to shit stuff, the Dow was at 4,000. So that was 1994. And today we're still going and the world's going to hell and we're still moving higher. So there's a reason for that. And I think a lot of people miss all the news. I think Nike, if you look at Nike's earnings, it's a perfect example. It's a perfect example. Talk. Supply chain issues, higher costs, blah, 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 manufacturing, COVID in Shenzhen, whatever you want to say, Nike blows out their numbers. Why?
Yep.
I go to the Nike store on Sunday and I'm like, what is going on there? There's a line of kids down the street. What the hell is going on there? And, we're dropping some shoes, So I go talk to a few of the kids. I go, are you really waiting right now to go get shoes at Nike? Like physically, like a human? Oh, yeah. Down the street. Okay. So why? Because with inflation also comes higher prices and higher profits to companies. So a lot of people just think inflation's bad and they don't understand that that's not true. Inflation isn't bad. Inflation's a byproduct of a rapidly growing economy where actually demand is outstripping supply. And that's what's happening across the board. Okay. So my wife's in the beauty business. She runs a company. It's called wildling.com. And she orders all of her stuff from China. Okay. China is making as much of her stuff as they possibly can. But they have to deal with all the issues in China. And trust me, there's a ton of issues in China right now.
Yeah.
But in the United States, the demand is off the charts. Off the charts.
I want to ask you about that because, obviously the Nike earnings, they were from last quarter, but it's good to have that from coming out. You just saw this last week, which is incredible. I want to hear about that too. But what is happening in China? Is China a bellwether? Because I was looking a little bit about how the Chinese consumer is saving 4 times as much money as what they were saving last January. January to January, they're saving 4 times as much money. In my opinion, it's because they're panicking. They think this real estate crisis is going to come crumbling down. The Chinese government's trying to stimulate and
you want to take your first shot now? I think we should take our first shot now. Not to interrupt you, but what you're saying is really true. This is the biggest risk in the stock market. By the way, it's a Tesla tequila day. That's why we're doing this. You never announced that at the beginning, Kevin, that this is a Tesla tequila day. We're celebrating because Tesla went up 3 Gordons. We have 3 Gordon day, and that means we drink tequila. That means Kevin comes back into the fold and says, Ross, we got to drink some tequila. Although he doesn't have any tequila, I sent you tequila. You got that tequila, right? You probably drank it in like a day.
I did ask the guys. There's always tequila showing up here, but the tequila goes in a day. I'll find out. Thank you for sending it.
So I'm out. I got to get Nosotros tequila. Shout out to Nosotros to make some more Tesla tequila. So we're going Don Julio and Yeho. But since we're going to talk about the problems in China, we're going to do our first shot.
There's a commenter here who's nailed it. They said, I'm drinking whiskey because I don't have Tesla tequila. That's literally what I
Jack? You're drinking Jack? I know. It's like I have to. Kevin.
They got to bring it back in stock. Listen,
I will buy. That's the whiskey you're drinking is Jack.
I will buy 10 bottles of Tesla tequila right now if it came up for sale again.
I just can't believe you're drinking Jack. I mean, that's like
Look,
almost
last
criminal.
time I had Jose Cuervo, and you were making fun of me for that.
That's true. Wait, hold on. I'm on the wrong internet. I have to switch internets. Hold on.
Okay. Ross will be right back. Anyway, welcome. So yeah, I mean, obviously this is exciting because while Tesla's up a good chunk today, what were we up 7-8%, something like that today? And anyway, we ended at we had a high of 997, ended at 993 on Tesla today. Absolutely incredible, almost 1,000.
Right,
You back? You good?
I'm good. You know, this happens to me. And it switches internets and then it screws up the whole stream. So I was like, I have to deal with this now.
You know, Starlink, man.
I know.
Cheers, dude.
A toast. Me, Kevin. I think we can officially say the correction is over. It feels like we've broken through finally that resistance point where it was like we kind of blasted through it today. So hopefully the correction's over, but a toast to all of us who made it through the last 3 months have been brutal.
It's been tough. Cheers.
So let's talk about China. We go back to China. You were mentioning the host of problems that China's having right now economically, and the fact that the most successful Chinese companies like Alibaba and Tencent are laying off thousands of people. So when you're laying off people and you're the biggest companies in China, that means there's a recession. And so we've seen we're seeing all the elements of recession, but China will never call it a recession.
Sure.
And that's really an opportunity for America, because now China's in a very poor position to negotiate with us about Russia and other issues, because if they have any economic issues with the United States, their recession might get brutal. And we all know that the Chinese do not like losing money, and what matters to them is economic power. So they're quite vulnerable in the current environment, actually. This is the best position America's been in globally in our lifetime. Putin just blew himself up. Literally, he made the most colossal mistake in Russian history in 100 years. And unfortunately for the Russian people, they will suffer for this as long as we can think in the future. Jeez. But we are now developing a way to cut out the three main products that Russia produces in the world and not need them anymore from Russia. And these are easy products to replace: oil and wheat and natural gas. And so we have all that here, actually. So yeah, you want to invest in United States production right now. China, Europe, Russia, the rest of the world is very uninvestable in our viewpoint right now.
Wow. And
this is one of the best positions America has been in. Everybody's building factories in America. I've got 3 different electric vehicle factories we're building. We've got the Tesla factory in Austin, and we've got the Polestar factory in South Carolina, and we've got the Arcimoto factory in Oregon that we're building simultaneously now through our investments in these EV players, all of which are going to provide tens of thousands of vehicles a year as a solution for people. The solution for inflation is technology, and we have the climate change technology today to solve energy inflation. So now we have to adopt that technology, and that is now going to be accelerated through this shock that we're seeing, not only with the price of oil, but with the forces of evil and murder and what they're willing to do to control these resources and profit from them.
You know, I've noticed a common denominator. You don't like Vlads.
I don't like Vlads, like Vladimir Putin and Vlad of Robin Hood. I don't have a lot of Vlad friends, but it's not I have a lot of Russian friends, actually. There's a lot of Russian Jews here, and I'm Ukrainian by descent and Eastern European by descent. I'm not Russian by descent, but here in LA, we have a huge Russian community and, huge group of people here who are all, suffering greatly because of Putin's ignorance.
Right.
Russia deserves a better future than what they're getting. The culture and history of Russia is impressive, and it's always been fucked up by the governments.
Yeah.
And it's just sad in this era that it's continuing.
I gotta ask you this. So there was some research by Energy Insights this morning. They track, oil and gas and everything, that we were expecting to see a decline of 3.8 million barrels a day of oil in our global economy. And they mentioned we're not seeing that. Maybe because in a weird way, and I want your opinion on this, the free market is doing its magic. You've got traders in Europe who are sending ships to Russia, storing it in Europe, rebranding the Russian oil as now from Europe, and it's still entering the market. So in other words, Russia has to sell oil at a 50% discount or whatever, yet that oil is actually still going to the market to minimize its impact on the U.S. and other areas. In my opinion, brilliant functioning of the free market if it's happening. Want to hear yours.
Well, I mean, they sell cocaine every day all over the world, and it's completely illegal in every country it's sold. So if you think about selling illegal oil, that's probably easier than selling cocaine, So what you're saying is absolutely true. Russia didn't stop production of oil, and I can guarantee you there are people willing to buy it.
Yeah,
because there's so many soulless, moralist people that don't give a crap for money. That
I'm pretty sure
is just the way it is.
I'm pretty sure India almost negotiated a deal with
India recently that I didn't know what's going on in India and Modi and the nationalism, the Hindu nationalism that's going on under Modi, which is very Trumpian. So like Trump unleashed this really negative, authoritarian, fascist viewpoint across leaders in the world, like Bolsonaro in Brazil. Brazil deserves a much better president than what they have. And they have Modi, who's really consolidated his power originally almost as like a liberal reformer economic guy to really now a nationalist. And what's happening in India is really sad because the country's going backwards now under Modi. And it's a really progressive, opportunistic economy that has been held back by its government for, I don't know, since Gandhi. So Russia is probably the worst example of how to destroy your own country and destroy somebody else's. And India is just like following along the path.
Oh.
We're in with them. Like, you have to be brain dead if you think about India's position in the world and its ability to prosper through intelligent trade to side with Russia.
That makes sense. What about, want to ask about what you think about the 50 BP. Everybody's freaking out about the Fed and 50 BP. Mind you, we're at 0.25 rates. In 2019, everything's freaking booming, and we're at 2.5, okay? And people are worried about going to 0.75.
Right. You got this. You're getting this down. You're getting this down now, Kev. You started as a real estate guy, and you're getting this stock market thing down. I'll tell you, you're absolutely right. It's nonsensical. Why do we have zero interest rates? Well, I should be fucking furious that we have zero interest rate. We have zero interest rate. Okay, you leave my house right now, you can't drive down the street because there's so many construction trucks on each side of the street. It's like a one-lane thing now because every fucking house in LA is being torn down and rebuilt. Every single one. We need 5% mortgages. Please come as soon as possible. It's supply and demand imbalance.
Yeah.
It's supply and demand imbalance. It's just so one of the few classes I got an A in my entire life. So I'm not saying this in any bragging way. I was not an A student. I was a B student. Okay, I went to an Ivy League school, but I was a B student. I was solid. But I got an A in economics at Wharton, Econ 1 and 2. Actually, the highest grade in my class, which I think was luck more than skill. But that said, it is a simple supply and demand imbalance. And with that, rates moving to an equilibrium level, which would make sense for a robust U.S. economy with a probably longer term now average inflation rate of 3% instead of 2%, we should have a 2 to 3% short-term rate right now. So to me, 2% is like probably is a good way to keep growth going and not hurt the economy. You know, I think between 2 and 3, you start to play the game, the danger game. But I told you, like, my philosophy, you know, you kind of get 3 rate hikes, and then you got to kind of be concerned about what they're doing and saying, because, you know, all, you know, bear markets are caused by the Fed.
Yeah, probably. Well, so let me ask you this. Jerome Powell, at his January meeting, actually, no, it was when he was testifying before Congress, suggested that we should hike rates like we did in 2004, which was 17 25 basis point hikes in a row. That would take us to 4.25 right now, 17. And now you've got the more hawkish people like Barkin, and they're saying we should hike rates like we did in 1994, which is where we had multiple 50 basis point hikes, and we didn't see a recession. You know, we just saw, you know, moderate growth until the tech bubble.
Are you trying to tell people how old I am? You know, because I've lived through all that.
Hey, look, we all know
because I remember it all.
We all know you're 69, but we love it.
Thanks. I'm the oldest looking 35-year-old, you know. So I lived through all this, and boy, I hope it's like 94. I hope it's like 94. That was the most profitable period of time of my life. And so I don't believe any period of time is like the other period of time. You know, every decade to me is going to be different. And this decade is definitely shaping up to be different, with different winners and losers than I would have told you 6 months ago. Just the same, I don't believe in like static thought. Like whatever I say today is static for the next 10 years. You know, you're
allowed to change your mind?
Right. You have to be flexible with investing. You have to understand that there might be a war that makes no sense that'll break out in the biggest wheat producing nation in the world. You know, like, how does that affect John Deere? Had a whole John Deere incident last week. But so the way I see it is the Fed will look at each month what data they get and what is happening, and will have to deal with that. Like, if you're a virologist, you're worried about Omicron BA2+. You know,
no.
If you're a partier, you're worried about when you're booking your flight to Vegas. You know, we can worry about many factors like, oh, what's the Fed going to do? What's Ukraine going to do on the economy? How's inflation going to impact my life or whatever? But each month that we move forward, the variables will change.
Yeah.
And the Fed will adjust to that. So when they say I've got a goal to get to 2.5 in the next year and a half, to me, that's ideal. That's fucking ideal. That's real dovish to me. Because 2.5% in a 3% inflation rate means that you still have a negative real rate of return. Therefore, you have a huge incentive to invest. Do you understand? Yeah. So the way we look at it is you have real rate of return.
Yeah, here it is. 2022, 3, and 4. I mean, like basically mid twos. I mean, like nothing projected greater than that. And then the long term, here's the long term, 2-4. Just like you're saying, right there, smack dab in the middle, man. Nothing scary.
Yeah. So when I started in the business, it's kind of funny. I started in 94. And so when you look back 10 or 15 years from 94 to 74, it was a high inflationary period. So when we would run projections like for retirement 20 to 30 years from now, we would run 4% or 5% inflation rates. That's when I started in the business. So we would run like a projection for 4% inflation for 25 years. And that's
Wow.
actually substantial. So when you think about saving and investing for retirement, you have to do substantially better because inflation eats up the value of wealth. So inflation eats up the value of your wealth. Look at it that way. Like why do I care about inflation? Is because it's like it eats up the value of my income and the value of my wealth. So we don't really want high inflation. All good economies don't have high inflation. So when you're growing, an economy's growing and people are getting paid more, you just have a natural rate of inflation that's higher than 1.5 to 2%. And when the government deficit, the more money the government spends than they take in is kind of the natural inflation rate. So when you look at over the last 5 or 10 years, the government was printing all this money and giving it to people, or spending it.
Yeah.
And people weren't really spending it. And so what was happening was the government was printing money and people were buying bonds with it. And so you had low rates and you had low inflation, but people weren't really spending money. And then when Trump became president, he was like, I have a golden toilet, spend your money, cut your taxes, business is great. And it did ignite a certain level of business activity through cutting taxes and a pro-spending environment that people bought into. And it started the process. And then COVID hit. And when COVID hit, you locked down a society that really has never had to do this ever, right?
Yeah.
And now COVID's over. And so people are like out, and it feels better than it's ever felt to just do the things we used to do and take for granted, whether it's going to Disneyland or to a movie or Vegas. Like I was in Vegas in January and man, it just felt so good. I don't know how to say it, like I've gone to the clubs, I've gambled, but this time was so good. And so I think like there's this pent up demand that's hard to quantify, and people are spending money, and we're seeing it across the board, whether it's Disneyland or at the bar tabs, that people are spending 30% more on the same night out than they were spending pre-COVID, because it's much more special now to see your friends. Now, I just lost a really good friend to COVID, and unfortunately last week I went to his funeral. Yeah, because he was unvaccinated. And he was 56 years old, and Andy, rest in peace. And it's been a very hard time for me the last month dealing with this. And when you think about how it's affected our society and our lifestyles and now coming through this to the end, the upside to fun is enormous. And so that's where you get the supply and demand imbalance. And so we have a very good situation in theory, but we have all these other issues that come along with it. So when you think about inflation as the more money chasing the same amount of goods, that's exactly what we have. And so all the pent up money that people have been saving all these years, people are like, let's go spend it. Let's go out. I'm like, Kevin, let's go out to dinner. Let's do it right. Because in the old days, we might go out to dinner and just have a normal dinner. But now I'm like, yeah, we're meeting up. No masks anymore. Let's go party, And that's what's happening.
Oh, absolutely, without a doubt. And I want to ask you about this because I think for you and I, or really anybody in the top, 50% of incomes, inflation's kind of like, all right, it's going to cost me a little bit more in food and gas, but let's go. We're still going to have fun because we spent 2 years of our lives in a shell and it sucked or whatever, right? So what I want to ask you about is that bottom, the bottom 2 quintiles. So the lowest 20%, lowest quintile, they spend 27% of their after-tax money on food, which is crazy. So like that's a massive portion. Combined housing, I mean, they're getting screwed, right? So the poor people are getting screwed. Right. What stocks are going to get screwed because the poor people are getting screwed?
It's not that per se they're getting screwed. It's just money is transferred from one part of spending to another part of spending. So Actually, we were talking about this in the office. So you go from consumer discretionary to
Right.
consumer staples.
Yeah.
So like we were talking about the difference between Target stock and Costco. So
Okay, why
Target would
Target?
be a loser
Yeah.
and Costco would be a winner.
But why Target is not
Because
considered a staple blows my freaking mind. Is it the electronics? Is it the apparel? Dude, come
No, you
on,
make
man.
too much money.
People buy peanuts at freaking Target, okay? They buy their bananas there,
No,
and they're
Target's
nuts.
a mass. It's a mass store. It's not really to the lower end. It's a mass store.
So is Walmart.
No,
And that's a
Walmart is
staple.
a staple.
Yeah.
Walmart people rely on every day in most cities. Like in a lot of cities, you go to Walmart, that's where you rely on. And same with Costco. But
Right.
Costco is a better business than Walmart. And so, you know, like Costco benefits greatly in this environment at the expense of cost of Target, where
Right.
you might buy an extra toy or you buy a piece of clothing that's probably 10 or 20% more expensive than you could get at somewhere else. So, but see, like, so here's the way the economy works. And this isn't about what's politically correct. This is about how the economy works. So you have the low end, and then you have the high end, and then you have the middle. Those are the three sectors of the economy. The most important sectors of the economy are the middle and the high end of the economy. Why? Because it's 99 fucking percent. Okay. So the truth is although it is harder for a swath of people, it's actually economically not as impactful as if it hurt the people in the middle who are benefiting greatly in this economy. So in the middle, people are all getting raises right now. So that's inflation. So there's wage inflation and there's like gas and goods inflation, you know?
Right.
But there's wage inflation too. So that person who used to make $82,000 maybe is making $90,000 now. So what's happening is that people are getting raises across the board. And the more their skill levels are, the more money they're making right now. And the more benefits they're getting, and companies are fighting to keep their people. We just had a situation where we tried to hire somebody. We ended up hiring them. And we offered them more money than what they were making. And we told them, when you go back and tell them you're leaving, they'll probably match it. But remember, we're the ones who offered you the higher amount, and it's a better opportunity.
Oh, nice.
So
Poison
sure
to
enough,
the well.
Well, listen, this is the job market, right?
Yeah.
So she goes back, and of course they match it. And she calls us back. She's like, oh, do I really want to go through the hassle? We're like, listen, we told you this was going to happen. I'm telling you, it's a better opportunity. You know, it's Ross Gerber, you know, like, you know. So she bought it, and she came. But that's the world we live in, where if you tell your boss right now that you're going to leave for a higher offer, they'll give you a raise.
Yeah.
I'm telling you that. So if you're watching Meet Kevin right now, little advice for you. Go say you got an offer for another job at the competitor down the street. I don't care what you do. If you're a plumber or you work at a restaurant, whatever you do, you'll make more money.
Yeah.
And if they don't give you more money, you should leave. Because
well, that's the thing.
That's the economy today.
Well, not only that, but if you don't get your raise that you ask for in this market, they don't value you, and that is your sign that you're
like
replaceable
I'm looking
already.
Right, like I need like a nanny housekeeper, and it's an absurd what we're willing to pay, and that's just sort of like the world today.
Oh
and like I'm thinking America should let in 1 million Ukrainians like tomorrow. Just with visas and work visas, it's like, you know, I'll take 2. You know, I'll
take 10.
Right. I mean, my God, it's like a horrible crisis, and yet we can't find people to work in America, right?
Yep.
So
bingo.
So we've got Afghanistan and Ukraine, for example. We could start a new program that will take 1 million people from each country and give them visas to come to America and work, and they'll take it.
Couldn't agree more. Absolutely.
So nevertheless, I think we have a great economy. I think China has issues. I think Europe has issues. I think the world has issues. The emerging markets all have issues. Okay. But U.S. is bringing everything home now. We're bringing our factories home. We're bringing our supply chains home. We're building up the industrial strength of our nation instead of outsourcing it now.
Right.
And with that comes a higher relative inflation rate, but a higher wealth rate and a higher income rate.
I gotta know though. So a lot of an excessive amount of wage inflation's happening everywhere. Everybody's getting raises, but a lot of it's happening under that six figures number, like you mentioned, that middle class. Even some of the lower class. One of the things I want to know though is as prices go up and people do move from discretionaries away from like the Etsy and the Shopify's and more into the staples, is it possible that you actually get a downgrade from, and here's a weird one, from Lululemon, Under Armour, and Nike and into Target, because Target's now doing clothing that's undercutting those brand names?
Have you been to a Lulu lately?
No.
Packed through the roof. Lulu's doing shoes. So Lulu just got into shoes. And we were looking at this because Lulu is one of my favorite stocks I don't own a lot of. We own just like a sliver. And boy, it's done well over the years. And they're doing shoes. Wow. Nike just reported a great quarter in their pack. Remember,
but that was Q4.
Research. No, I was in the store the other day.
That's true.
With the way we do research, we do a lot of on-the-ground research. We do a lot of talking to people, talking to employees.
I like that.
So like we get all the data and all the like analyst research from everybody. Yeah. Like people are like, oh, we should hire analysts. I'm like, why? I get like a million analyst reports from all the great analysts around. But the issue to me is what's real, like what's actually happening in real time. And that's where we spend the most time, like driving a Polestar and driving a Tesla and driving a Lucid, and then trying to order one and seeing who delivers me a car, like Tesla's biggest problem right now is everybody's complaining they can't get one. I get that complaint. People think I have some magical Tesla, like sales tool, like, oh, I'll get your Tesla faster because I tweet Elon. No, it doesn't work that way. I have no special powers. Yeah.
Listen, I might order some of these just to try the product. Look, I bought
the Nikes or the Lulus? I haven't tried it yet. We just heard about it and I was like, no way. If they're getting into shoes, that's a great business for them.
I am a big fan of what you're saying on the ground. I mean, I'm the loser in cheesecake asking the servers, hey, this has been busier. Your stock's down.
No, that's not the loser. That's the winner, man. That's how you got to talk to employees. You got to talk to people who know. And like, that's kind of how you learn about a business. So you talk to management, which is great, but they love their company. They work there and they make millions. And you got to talk to the low level people, the people who work day to day, and do you like working for your company? How competent are they? These are the things that matter.
Absolutely. Okay, fair. So anecdotally, we're doing well. So the question then is, look, we just had the energy shock. The food shock is still coming. The wheat, the fertilizer, which turns into soybeans, and the canola oil.
No, we got food. We got food in this country. Don't worry about food.
But prices, if they go up, I got less.
Midwest? Have you been to the Midwest? We're freaking good at food. We feed the whole world, okay? The one thing America is really good at, Ford trucks, food, pickup trucks, farming. I mean,
you're not
John Deere, we have advanced tractors coming. Like we have technology in farming to employ to increase yields here. Like we hold back farmers. Farmers have never had it good. If you meet a farmer, they'll tell you, look, we're not poor people because they're big farms, but like they don't make a lot of money. Farmers farm because they've been doing it for 5 generations. Right. You know what I mean? Right. So I have utmost respect for these people because it's hard work. And we have the best farmers in the world. So I get that if you're in Africa, you're worried about your food source. I get that. But we have to remember we're America. We're really, really good at stuff. Like, I don't understand why America continues to have this second-class citizen to the world attitude when we're the best country in the world. We have the best people in the world because we have immigration. So for 250 years, the smartest people have come here for a reason, because of freedom. Okay? It's like we forgot all this in the muddlesome, and now we got fucking Putin, the murderer, to remind us about freedom. So those of you who are young, you should say the Pledge of Allegiance once or twice again and listen to yourself, because we live in the greatest country in the world. We're lucky. We're very
you've
lucky.
You've got a good point. The famines, food shortages to come. I mean, we're talking maybe more expensive coffee because of Brazil, but it's Africa, North Africa, the Congo, it's the Middle East and Egypt. They're the ones that are going to get screwed. That's not a bad point, which is horrible. It's a horrible humanitarian crisis.
Right, exactly.
But if we're talking about the U.S. consumer, good point.
Right. So I'm not trying to minimize the impact on the world, but we're talking about investing right here.
Right.
We're not talking about like the UN's job to help all these countries get more wheat. Now, the good news is we can make so much wheat, we can give it to them. So I was looking at like wheat yields from every country in the world, and we're up there, obviously, number 1, 2, or 3, right?
Yeah.
So like in my mind, like same idea you're saying. It's not like in Russia they're going to stop growing. They just have to sell it illegally at a discount.
Right.
So I get all the fears and the price hikes, but actually, if you're buying Russian wheat or Russian oil, it's discounted. you know what I'm saying?
So I do.
That's the fucking way the world really works. When you get off Bloomberg and all these Reuters, I work with every news company in the world. No. I work with every news company in the world, it seems like. I can tell you they try very hard, and I love them all. But they are in the job of staying relevant, okay? If you're not watching them, they don't make money. So there will never be a day that there isn't news. That's scary.
You know, I love Bloomberg. I'm a Bloomberg fan, terminal. I'm in it every day. But I'll tell you, this morning, and I made a video on this, they put this article about how the Fed says recession is unavoidable because of what I told you earlier with the Russian oil, right? So I looked back at the Fed report, the actual research report. They left out the whole section in the Fed report that said, but the oil seems to be still getting to the market. Bloomberg left that part out, but took the, if Russian oil doesn't make it to the market, we'll see a recession argument. So they took the bad and didn't take the good in the Bloomberg article. And I'm like, what are you doing, Bloomberg? Barron's just did this last week as well, and it pisses me off. It's like, if you're going to report.
It's not what are you doing? You see,
like. It's wrong, though.
Journalism is dead.
I'm taking a shot on that one, dude.
Yeah, me too. Because I got to go soon.
You got to go soon. Dude, thank you for this. Okay, look, let's sum it up. Are we going into a recession or not? And what do people do? Do people call you up or what's going on? And cheers.
People call me up. That's what I do. So if you need financial advice, GerberKawasaki.com. That's, email. We work with lots of Meet Kevin fans, and I thank you. Your audience is great. I love your audience, and that's why I do the show. Not just because I love you, but I actually love your audience as well. They're just a phenomenal group of people that want to learn and do better for themselves, and that's why I do this. Because one of my main goals in life is to get young people to start investing at a young age, because that's the secret to making money over time, not quickly. Because I started when I was a kid, and that's the secret to my wealth. It's not like some magic. I invested in Apple, I invested in Tesla. To me, these things are obvious, but you have to start young and think long term, and then not buy into the things that get you to sell your investments and make the biggest mistake of your life, right? And so if we all live to 91, and you think about how much time that is between where you are today and 91, you're going to be a multi-millionaire investing in great growth companies. And my fund, GK, which is why I started it, is to give you an opportunity to own. Right now, we have about 48 stocks that are all growth stocks that give you in our themes of investment, but it allows you to invest as a core holding in your IRA or something where it will grow at a consistent rate. And then you can have your other investments in the individual stocks that you want to speculate or own individually. But that is the secret to wealth. And I think that's one of the great things about your show and why I love what you're doing, Kevin, and I say this every time, is because you're educating and helping a whole generation of young people have access to information that's crucial, which is why I do your show, so that they can make smart investment decisions and get excited about investing at a young age, which gives them the greatest asset of all time in investing, which is time. It's time. And so when I talk about Tesla, I don't know what the stock's going to do, but I know over the next 10 years, if you don't invest in Tesla, you've missed one of the greatest opportunities of your life. So thank you, Elon Musk. Congratulations on opening up the Berlin factory. I dreamed about this day that in Germany there would be a Tesla factory. You know, to think we did China, to think we did Fremont, Elon, and next Austin. You inspire me, honestly, to work harder and try to make a difference. And I get the haters, but you've made a huge impact on society and the world. And boy, exciting to just be a part of it. So thank you for helping make all of us successful with your hard work and genius. Elon, Tesla, yeah. It's amazing. It's truly amazing.
So Ross, 10 seconds.
Yeah.
Recession within the next 18 months because of the inversion of the yield curve potentially.
Well, the inversion of yield curve has nothing to do with the recession.
Okay.
So as I said, the only thing that will cause a recession is the Fed. And the Fed raising rates too aggressively will cause the recession. As I said earlier, I think the natural rate of interest should be around 2% right now. So as long as they keep rates below 2% on the Fed, I'm not that worried. As they get closer to 2%, if they're still looking aggressive, then I get worried.
Got it.
Every time there's a recession, it's their fault. But Powell and Yellen are two of the most competent people we could ask for driving this car. And I absolutely have faith that they're going to set it up like 94, where they just raise rates enough to cut the hotness.
Excess.
Yeah, the excess. But they don't get too aggressive and buy into the BS like it's 1970 or something. That they understand that, you know, natural forces will bring down inflation like technology. And if they do this right, as I've said over and over again, I think we're at the beginning of the roaring 20s. And this is going to be an amazing time for America. And when this war ends, because it will end and Putin will lose, and when we think about the post-COVID era over the next 5 years, I think this is a great time for investors. That's what I think. That's what I'm betting personally and with my clients on. And I've done my whole career, is America's going to win in the long run.
I love it. So, Ross, you've got an actively managed ETF, ticker symbol GK. We're up 14% in the last like 10 days because we finally hit freaking bottom. Let's go. Okay, good job. GerberKawasaki.com for financial advice. Finish the pitch, man.
Listen, financial planning is the whole game. As much as we can make you money, you got to have a plan. And that's why you reach out to us at GerberKawasaki.com. Whether you're just getting started, we have a Get Invested program, or whether you have millions of dollars, we have a high net worth program. That's what we do at our firm, is we help you get from A to B, whether you're 22, just starting your first job, or whether you're 65 and you're looking to retire. But that's what we do. So reach out, and we have, I think, 28 advisors now that we work with, and all types and all over the world in all languages as well.
Amazing. Ross, thank you so much for being here. Ross, stand by for a second. Everybody else, if you like this stream, make sure to share the video, like the video, subscribe, and we'll see you in the next one. Thanks so much. Goodbye.